Everyday chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Trading TV. This is your stage to shine.
Hello, good morning. Hello, everyone, and welcome to a new episode of Chat and Chart. This is the London session, and this is your host, Saif Qaddoura. I hope you had a great weekend. My apologies for not being able to make it here yesterday. I had some kind of a family emergency, so I hope you understand. But anyway, I didn't want to skip this week's preparation. So without further ado, let's get to it. Thank you, Arif. Thank you. Let me get to the economic calendar as always, and then we move to the charts to align our fundamentals with our technicals. So yesterday we had the S&P Global Manufacturing PMI, the ISM Manufacturing PMI, and the ISM Manufacturing Prices, all of which came in positive. Therefore, we saw DXY or the dollar gaining some momentum. So today we only have the job openings at 6 p.m. Dubai time, and it's expected to be slightly lower than the previous. So if it comes in anything higher than 7.42 million, we expect to see some positivity on the DXY. So that's it for today. Then we move to Wednesday. Wednesday is the preview for the NFP. So we start with the ADP non-farm employment change, which is expected to be negative. It's expected to be lower than the previous. The previous was 98,000. The forecast is 71,000. So if this comes in as expected or lower, then we expect to see a negative NFP on Friday. So this number always comes 2 days ahead of NFP to give us a clue on what the NFP might look like. Then we move to the S&P Global Services PMI, which is expected to stay unchanged at 53.6. If it comes in any higher than this, then it's positive, obviously, for the U.S. economy, and it shows resilience. If not, then we see some negativity on the DXY. And by the way, as long as we're above 50, then we're in the expansion territory. As long as or if we get any reading below 50, it means that the services sector is in contraction. So as per the forecast, we are expected to still be in the expansion territory. Then we move to ISM non-manufacturing prices. The previous number was 67.7. So anything non-manufacturing services and so on is expected, is going to get released tomorrow. And those are the prices. So those are the costs behind the non-manufacturing sectors. So if this comes in higher, it means higher inflation. It means positive USD, because it means that they will need to actually raise rates to fight this inflation, because at some point it moves to consumers and we get a higher CPI or CPI reading. Hi Yahya, good morning. I hope you and the family are doing well. Thank you very much, my friend. Thank you. So, and then we have the non-manufacturing PMI, which is expected to be slightly better than the previous at 54.2. And finally, we have the crude oil inventories. Last week we had a draw, the second week in a row. We have a negative reading, which is positive for oil prices, although oil actually dropped to 81 as of now. Anytime it reaches around 90, it gets rejected to the downside. So now we know that the pivot point is $92 per barrel. All right, so that's for Wednesday. Now we move to Thursday. Thursday, we have the initial jobless claims, the weekly number. So the previous is 197,000. The forecast is 205,000. So a slight increase in jobless claims. So that's seen as negative. If the actual comes in higher than this, then it's negative. If it comes in as expected or lower, then that's positive. 205K is historically low. So that means that the jobs market or the labor market is not cracking. It's still resilient, and it gives the Fed some room to hike rates without worrying about the jobs market. Finally, on Friday, we have the monthly numbers, which are the average hourly earnings for the month of July. Expected no change. The non-farm payrolls, however, are expected to be positive at 88,000 new jobs. But since we saw the ADP and non-farm employment change, it was negative. So this most likely might come in negative, but we will have to wait and see. June numbers were really bad because even though we had good numbers or good readings from May and April, they got revised, and they got revised down. So last NFP was somewhat brutal to the markets or to the labor market. It showed weakness. So this number is very, very important. We're going to see if it's improving or not. And finally, we have the unemployment rate, which was 4.2 in the previous reading and is still expected to come in at 4.2% this month. So that's basically because the unemployment rate is so low because we have something called the low hire, low fire environment in the US. So they're not hiring new people, they're not firing people. So that's why you see the unemployment rate stable. So this is not necessarily a good thing, having 4.2%. Pardon me. This is not necessarily a good thing. It doesn't mean that the labor market is still very resilient, but the initial jobless claims show us that the jobs market is still somewhat solid, but this whole story can change if Friday gives us bad numbers. All right, so that's it for the economic calendar. Do you guys have any questions before we move to the charts? I'm going to stop sharing and then I'll share my charts. Okay. Go to share and then there it is. Okay. All right, guys. So as always, we start with the monthly chart. We have an inside candle, or like we have a candle that is closed below those bands, the bands that you are now familiar with. Arif, can I explain yen carry trade? Yes, let me explain it before we actually move to the charts. Okay, so the carry trade is basically, you guys know how the yen as a currency like has very low rates in comparison to other currencies, mainly the US dollar. So what investors usually do, and it's been going on for decades now, what they usually do is to make the most out of this environment, the low interest rate environment in Japan, they borrow Japanese yen. Okay, so they borrow Japanese yen at a very low interest rates, at a very low cost, and then they turn it, or they exchange it with dollars. Okay, so the debt or the loan is in yen, and they exchange it for US dollars, and they go and buy US stocks, US bonds, whatever. Okay, so they get higher return from those investments, such as government bonds, US government bonds, or US stocks, or whatever. Okay, so when they finish, or like this trade matures, let's say they do it once a year, twice a year. So at the end of this trade, what they do is they sell the bonds or the stocks, they get back their dollars, and they got back more dollars, right? So what they do is now they exchange it back to yens, and they pay their debts in the yen, and the difference is their profit. Why? Because they're paying less on the yen as like a cost of debt. They're paying less, and they're getting more on USD investments. So that's why people do it. But what can go wrong with carry trades? It only happens if the yen becomes too strong. Like if it becomes too strong to the point it offsets the profit they made on the difference between interest rates, then that's a problem for investors. So they usually, when you hear something like carry trade unwinding, when that happens, or when investors like suspect that the government is going to intervene in the yen price, what they do is they start selling their investments in the US, and they close their debts in yen. That's why you see a big drop usually in yen in USD JPY. Why? Because they're selling USD and buying yen to fulfill their debts. So that's the carry trade in a nutshell. And by the way, speaking of intervention, during the weekend, Washington and Tokyo, like the two governments, actually made a joint effort to intervene in the price of yen. So both of them actually, because yen reached what, like 164 against the dollar. So that's not good for the US, and that's not good for Japan. So US investors, now you know why, because of the carry trade, and the Japanese yen because of the trade balance issue. So now this is the first time in a decade or more. I think the first time in 15 years they do this. Washington and Tokyo came together to actually support the yen, and they bought 15 billion yens to support. And we saw this drop in USD JPY during the past couple of days. So here, it happened here on Thursday. Okay, so Thursday and Friday, we saw this big drop. This big drop was an intervention, and that's the daily chart, by the way. Huh? Let me put back the watermark so you guys can see. Okay. We go back to the XY. I hope you, I hope I explained it well, Arif. Do you have any more questions? Okay. All right. So now we go to the charts. We go back to DXY where we left off. So last intervention was in 1998. I believe you're talking about the joint intervention between Washington and Tokyo, because Tokyo has been intervening, like, I don't know, every couple of months for the past, I don't know, 3-4 years. So they've been intervening quite a lot, Tokyo alone. But maybe you mean the intervention between the US and Tokyo, or Washington and Tokyo. So that's basically what, like, 26, 28 years. Yeah, that's 28 years ago. So yeah, that's somewhat historic. We're seeing interesting stuff during our time in the markets. So yeah, the DXY closed somewhat bearish on the month. So we're expected to see somewhere between 99 as the maximum correction, but the weekly and daily show something else. On the weekly, we saw a big rejection from this level, which is the 126-day moving average. And then it might be just a correction, but we need to look on lower time frames to see what's really happening. So if you take a look at the daily chart, you see that it got rejected from the 126-day moving average yesterday, and it closed quite bullish. And that coincided with this trend line here. So I think this is done here now, and we're expected to continue going upwards from here. 4 hours, or not 4 hours, let's go to 8 hours actually. It's clearer. Yeah, so now we're expected to see, let me see, we're expected to see 102.5, 102.4 in the coming period, which would eventually cause the gold and everything against the dollar to go down. Okay, Arif, I'm glad you understood my explanation. All right, so now, next now we move to euro. We go to the monthly again because we just had the monthly close on Friday, so that's why we start with the monthly. Yeah, so this closed somewhat bullish, and we're expected to continue going upwards to 1.1640. But for me, that's not a very strong probability. I think it's going to continue dropping from here. And why do I say this? I say this because of the weekly and the daily. So now, if you like connect those, you have three lower highs, three lower lows, and we go to the daily and we see it clearly. So we have this and we have this. Actually, we have two lower lows. So this is lower than this, but we still need to see a break below this to confirm the drop in Euro USD. If that happens, we officially like we officially become in a downtrend. Okay. So on the daily, we saw a very strong rejection from the trend line, an engulfing candle at a very important place, or a very important structure point. So I believe we're going to continue dropping from here. On the 8 hours, it looks pretty much the same. Yes, we're still dropping. I think the next target would be this. So what's the next target? The next target is 1.1250. So yeah, we have 102.5 on DXY, and we have 1.1250 on Euro USD. Then let's see what's happening with the GBP USD. We look at the monthly, close somewhat bullish, but again, we're in a range. We've been trading in a range for a while. That's the weekly. Also bullish, but still in a range. It's not trending. On the daily, we saw yesterday a rejection from the trend line as well. So if you want to target the lower side of the range, or the lower band of the range, then you can get an easy 300 point or 300 pip drop. So it would look something like this. You might sell around 34.50 with stops above 34.570, and you target this. So that's a 1 to 2.6, which is not very bad in my opinion. And if you want to go full board with this, then you can target a 1 to 3 to 1.3110. Okay, so that would be a good trade, I believe. I'm going to keep it. I'm not going to enter this trade. I'm just going to keep it for future reference to see if our analysis worked. Okay. And then we move, or you know what? I might just enter it because like it's worth the risk. It's actually good. And USD JPY, we just explained what happened here. It was a clear intervention. Let's just fix the trend line here. So yeah, that's a V-shaped reversal to the upside. If we close above 158, then we continue to the upside. But that's why I don't like to trade USD JPY. I don't like to swing USD JPY for the reason of continuous interventions by the government. That's something that actually um, makes me not want to trade USD JPY. But if you just want to look at uh, the usual setup, it was there. Like we saw an engulfing candle, a correction, and then a drop. But I wouldn't have sold this because this is against the trend. And if I get anything positive from here, I might be interested to enter. But again, I would do that if it was anything other than USD JPY. I don't play around with JPY because of the interventions. Now, let's take a look at Bitcoin. Bitcoin is actually correcting to the upside. I was talking to a prime trader yesterday, and his analysis was that it would reach this area, and I agreed with him. He has another way, or like a different way of analyzing, but we both agreed on this level, which is the 68, 69 thousand dollars before continuing the drop. And then yeah, for me, anything around the early 50s or the late 40s, I would be very happy to enter Bitcoin, because I think I've told you before, I do not use leverage on crypto. So that would be the actual thing. I like buying the actual thing. And if it doubles in value, I would be very happy. So that's it for Bitcoin. Now time to move to gold. I have a very interesting view on gold, actually. The monthly closed quite bearish, although it was a green candle, but that looks very bearish to me. We have the pivot point above the monthly candle, which is 210, 4,210. I believe it's going to hold. Like, I doubt it's going to sweep it because that's a monthly candle. It's very hard to sweep. That's for one. For two, the weekly also closed somewhat bearish, but it closed inside the band. So I'm expecting to see 140, 4,140 before continuing the drop. But you were expecting these interventions from the 162 level, but I closed my trade at and loss. I expected this drop, but unfortunate. Yeah, that happens all the time, man. That's why I told you I don't trade USD JPY. It's exactly because of that. Now back to gold. I want you to remember this number on the weekly time frame. On the weekly time frame, we can obviously see that it closed inside the band. So the general rule says if you close inside the band when you're in a downtrend, the correction might extend toward the upper band. So the upper band is around 4,140. Now remember this number because we're going to arrive to this exact number on lower time frames. So now we go to the daily. Now we go to the daily and we see the Elliott triangle. This is one of my favorite patterns. Okay, so we can clearly see that it's been trending down and then it started to range for the whole month of July. And the range looks like a triangle. Okay. So what does that mean? It means that this is a continuation pattern. So what is a continuation pattern? It continues the previous trend. What is the previous trend? A downtrend. So we're expected to actually reach. Let me go to lower time frames to show you what I see. Reset chart view. By the way, this trade is still running. Yeah, the trade that I took from 170, it's still is still running. But now I have a new trade or a new order to enter around this area, which is 140, with stops above C, which is this wave, and targeting 3,860. That's a 1 to 9. It's a very, very good trade. I would be actually very happy if that actually works out, because if it reaches 140, that's a very high probability trade. It would actually make me more money to risk on the way up. So yeah, for me, and let me explain the pattern first. Yeah, before I forget. Usually, those patterns are consisted of 1, 2, 3, 4, and 5 waves. So 5 corrective waves. Each wave is 3 waves, like inside of it. And usually, after it reaches E, the usual is that what you do is the following: you sell around E with your stops above C, because it's not allowed to break above C. What is C? C is 170. That's the level that invalidates this pattern. So that's a very, very tight stop loss in comparison to what it could give, which is 3,860. We might even reach more than 3,860, but that's the first target on the Fibonacci extensions that I've explained in a previous live stream. So yeah, that's a 1 to 9. Very excited to get into this trade, because like out of what 10 times it works 8. So I like it very much. Yeah, that's pretty much it. And if you want to be like safer into entering this trade, you can wait for a setup around the E area, which is 140. So you can be looking at the 5-minute time frame, for example, or 15-minute time frame. Wait for a bearish setup to get an even higher confirmation and a tighter stop. But I wouldn't recommend any stop below the level of C, which is 170. Yeah, that's for gold. And let's take a look at silver real quick. Silver is also has been like correcting in a sideways movement, so it's still expected to continue downwards, maybe to 49, 45. God knows, we will have to wait and see. But for now, I still believe we're headed lower. Okay, as you can see, that's a triangle as well, which is a continuation pattern to the downside. Yeah, so guys, that's what I actually wanted to make sure you see before you start trading this week. I wanted to give you this information before you start, to prepare you for the week ahead. I know this is very important. What I just said is very important, and what I just explained is very important. That's why I made sure to actually not skip this analysis session. I hope it was helpful. I hope you enjoyed it, and I hope you actually managed to make money out of what we discussed here today. Thank you very much for watching, and I'll see you on the next one, guys. Take care of yourselves and good luck trading. Bye.